Hey everyone, Retire on Dividends here. I'm back to make, I want to say the final video to the weekly or the YieldMax weekly change, but I'll make this an ongoing series, probably, once per month or once every 2 months. But this is the last video where I actually finish going through the selections of funds, the funds that already are out there for YieldMax. And what we do is we take a look at all of the covered call ETFs for YieldMax, and we go to their underlying, and we see from Friday to Friday, we compare what was the price fluctuation for the underlying and how many times did it change and go under 5% or over 5%. And we track that, for that, entire period. And the period I'm pulling is January 6th, 2023 up until now. When I say now, I'm recording this video on Sunday, November the 10th. But again, I could pull this data December, and then January next year, and so on and so forth, because now it's set up and pretty much automated. So first up, next on the list is Google. So obviously GUI is a covered call ETF for YieldMax, and they trade covered calls on Google. So if you can see here, although I track the change in 5%, I do highlight anything above 10%. So if you look here, okay, they're already in March 23, they did have a jump of 12% in 1 week. Why is that important? Well, again, Google itself, it's not very volatile. So they probably normally sell covered calls, I'm guessing 3 to 4% out of the money. So this could possibly be like an 8% upside loss, right? We wouldn't have been able to capture 8% of that upside, which kind of sucks. Of course, now they do have call credit spread, which allows them to limit, the downside when it does break through that strike. Again, in May 23, 11% day. So that's, again, I'm surprised to see that many so early. In July 23, a 10% day. We'll get to the 5% at the end, by the way, to see how many were 5%. April 24, jump 1 week, 11%, pretty big jump. And then obviously this goes up to November 8th, which, nothing after that. So they had what? 1, 2, where's the 2? 2, 3, 4. So 4 days above 10%. Again, we'll check the 5 at the end. And then we have Zomo. So Zomo, obviously, covered call ETF. They trade on XOM, Exxon. So let's see if they had any 10% fluctuations. Scroll through. Wow, good job. So Exxon, pretty stable. No changes on, 10% going either direction. That is a good sign. Let's check out SNOI. So SNOI is a newer fund. Their underlying is Snow. That's like a cloud-based IT type company, if anyone cares. So right off the bat, the first week, they did go up 13%. And then the third week, it did go up 10%. Here's another one, 13%. Another one down 15, up 16. Down 18. Good God. Down 18, then down 13. That was not a good 2 weeks. Down 12. All right, so overall, 1, 2, 3... 4, 5, 6, 7, 8. So 8, that's not good, right? 8 times it fluctuated 10%. All right, how about JPMO? JP Morgan, again, biggest bank, right? So you figure, biggest bank in US at least, you figure they would not fluctuate as much. So I'm not expecting any 10% changes. I haven't looked at this, just so you guys know. This is the first time. Okay, so nothing highlighted, which means no jumps up or down 10%. Again, we'll go over the 5% at the end. And then here's Murni, underlying Moderna. I'm sure they'll have plenty of 10%, so let's take a look. Yeah, February 23, down 16%. And then again in April, down 10%. August, up 10%. September, down 12%. October, 2 weeks in a row, down 18, down 10. Again, not fantastic. And then up 10, up 11, down 10, up 15, up 13, up 25, negative 14, negative 10, negative 29, negative 14. So the fluctuations on this one is god awful. I mean, this is, we know Murni sucks as a fund, and this just shows you why, right? That you can't predict it, right? And the underlying is obviously going down a lot. That doesn't help a lot. So a lot of pinks there. So no need to even go any further there. All right, so here's Airbnb. The YieldMax fund is ticker ABNY, AMDY. So let's see how Airbnb did. First week jumped 13%. 2 weeks later jumped 14%. 3 weeks later jumped 20%. Not a good start. Down 12, up 10. Down 10, up 11. Could have been worse, right? But again, it's just another one I don't trust. This one's going to be awful. So here's AIYY. The underlying ticker symbol is AI. First week, 15%, 31%, 45%, 11%, 27%. I mean, I forget it. I mean, the 10% are out of control. This is one I would not touch with a 10-foot pole. I know for those of you just listening, to give you an idea, there's a shitload of 10% fluctuations. Let me count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 28, 29. Oh my God, 30. 30 out of what, like 96 weeks or so. That's insane. Get away from AIYY while you can. Good Lord. All right, so here's where we do the pivot table, right? And here's GUI at the top. By the way, my 2-year-old is napping right next to me in the car. If he wakes up and you hear him talking or crying, it's not me, it's him, okay? All right, so here's the pivot tables. So first we'll look at it this way. So GUI, or Google, I should say, had 8 weeks where it changed under 5%, and then 11 weeks where it went above 5%. So that's a total of 19% total changes over 96 weeks. So out of 96 weeks, 19% of the time, they had 5% fluctuations each week, all right? Their implied volatility is 20%. So, it could be better. XOM actually did much better. This is for Zomo. They only had 5 and 5. 5 times it went under 5%, 5 times it went over, all right? So 10% of the time, it went under or above 5% within that 96-week comparison time frame. So I have to say, I am impressed, Zomo. I do not invest in Zomo, but should I be? Maybe. All right, let's take a look at Snow for Snowy. 12 weeks under 5%, 18 weeks above. That's a total of 31% of the time. It fluctuates above or under 5%. Again, within the 96-week time frame. Their IV is high, though, 65%. So it makes it kind of worth it. We'll take a look at the numbers at the end on the summary where we grade them. JP Morgan, this is for JPMO. Only 7 times it went under and 4 times it went above. So 11% of the time, it did, went up or down 5% of the 96 weeks. Their IV is 19%. All right, here's Moderna. All right, 29 times it went under 5%. 16 times went over 5%. 46% of the time it went under or above 5% within those 96 weeks. Yikes. 61% IV though, so that's good. But it's probably the IV is probably so high because people keep selling out. All right, Airbnb. This is for AMDY, obviously, covered call ETF. 14 times it went under 5%, and 15 times went over 5% change. And that's a total of 30% of the time. It changed under or above 5% within 96 weeks, 26% IV. And last but not least, we have our beautiful fund AI, or should we say our ugly ass fund. 30 times it went under 5% and 28 times it went over 5%. So yeah, we've seen better for sure. And that, again, that's within a 96-week time frame. So 60% of the time, they went under or above 5%. Their IV is only 53%. So to me, that does not even justify it. So now, what do we do now? Now, we have every single fund here. Every single fund we've added. Every YieldMax covered call ETF with a single underlying is on here now. So now we could do the true grades, okay? So we'll go down the line. I have it sorted by the highest grade to the lowest grade. And we'll go through the columns real quick so you know what I'm looking at from left to right. So obviously, first column is the ticker. That's the underlying ticker. The next column is the ETF ticker. And then it's the ETF price. So you can see, what the current price is to give you an idea. Like, because again, most of these funds launched at $20. Some that are newer launch at $50, obviously, but, not many. And then we show the price of the underlying on January 6th when we started the comparison, and then the price as of today. That way we can show, in case, like, for example, MSTR, if you look, it did increase by 1,584%, which is very unusual. So to say that one, is normal, it's definitely not normal, right? It's a very unusual fund. It's going to be tough to get a good grade with that type of upside, right? Also, here's the under 5% beats, which we covered, and then over 5% beats. And then we have total 5% beats, which obviously adds the 2. And then we have the 30-day IV. So what do? We compare the 30-day IV, because again, the higher the IV, the higher the premium we get paid, right? So the higher the IV, you would expect a higher 5% beat total, right, in column I. So you could see when we grade them, what do? I have a little formula. I divide I2, in this example, this is for Disney, I2 divided by J2, right? And then I do 100% minus that number, right? Because it starts off, obviously, the lower, the better, right? Because you don't want the beats to be greater than the IV. You want the beats number to be much less percentage than the actual IV. In Disney's case, their beats number was only 11%. Their IV is 36%. Again, both are low, but the ratio is pretty good because they got a grade of 69%. And that's good. That's number one. They are the number one fund when it comes to the 5% fluctuations. Now, if we look at Disney price, they're at $16.25. They're an early launcher. They launched a while ago. I should probably put launch date to give you guys an idea of that. But, it's not terrible. It's not great at the same time. I don't think they're worthy of number one, but that's just how it ended up. And then I have extra credit over, because what does this one do? This one just does the comparison simply based on the over 5% beats, because that's the one that really hurts. Because when it goes over 5%, that's when we're going to get capped on our covered calls. Even today, right? Even though they're doing the covered call spread, if it goes under 5%, I mean, obviously if it moons way past that, yeah, we'll get some, we'll offset some of that loss, but still, over 5%, still, it's a loss nonetheless. And even the extra credit percent, 83%, Disney did well there as well. So were they number one? Yes, they were. Okay, so they were number one in both. All right, number two, someone we'd actually buy, MSFO. I mean, I shouldn't say that because people do buy DISO. It is a popular fund. It's just one I don't own MSFO too. I don't own any of the top, oh my God, 2, 4, 6, 8. I own like number 10, Misty. Oh, yeah. All right, so DISO is number one. Clearly, we talked about that. MSFO is number two. Now, MSFO, again, they have a grade of 58%, an extra credit grade of 64%. Look at their beats, 7% of the time. That's awesome. It's just that their IV is so damn low. And again, this is a 30-day IV, which doesn't give a great picture. Why do I say that? Look at SMCI. This is row 5, right? Their 30-day IV is 129%. It's not always like that. It's only like that because they had some recent news which caused a huge market sell-off. So if I check this in probably another 2 months or so, it's probably going to be a little less. So their grade is actually going to be much worse than what is represented right now. It's just showing you that, right now, based on the IV, like it's probably worth, I'm not going to say it's worth it, but it's the IV is much more, appreciative of the fluctuations, because if you get 129% IV on a fund that only changes, 5%, 63% of the time, obviously that's not bad. That's not great, but it's not bad. All right, anyway, we skipped number 3. Number 3 was Snowy. I never show this one love. I don't know why, because I don't know. I don't know much about it. I'm just not a fan. But anyway, they did good. 52% grade, 71% on the extra credit. We talked about SMCY, SMCI. Again, that one's scary, so that's, do what you want to do with that one, right? Super risky, high risk, high reward. Next is Zoma. We expected that one to be there. 45% grade, 73% on the extra credit. So that's pretty good. JPMO is next, 42%, 79% extra credit. Not bad. And then let's go to the next batch. YBIT, again, I don't touch this one with a 10-foot pole because their underlying yields more than their own damn fund. So what is that? What the hell is the point? Just own Bitto, right? Don't do the synthetic. Own Bitto. That way you get the yield for that and the yield for that. Anyway, they got a 33% grade, 62% extra credit. Aptly, not, this is bad. Like, I thought Aptly would do very, very well. But their IV is so low, which is the problem. 18% IV versus the total 5% beats 12%, which, that's rough, man. Anyway, 32% grade, extra credit, 55%. So, I mean, we can keep going on and on. Babo is next. And then Misty, they're up there. And again, they're number 10. They got a grade of 26%, extra credit 53%. Because, again, they have a really high IV. However, the fluctuations, they're there. They are there. Murney's next, then Tesla. I'm surprised Tesla's even that high. I would expect Murney and Tesla to actually be on the bottom. Then we have TSMY, AMDY. I'm surprised that they are this low, 17%. But again, it doesn't mean like the beats above and under 5%. Maybe it's just above 5%, right? Maybe it's just under 5%. I don't know. And we could always kind of change the filters out to see, like, do we want to pull maybe 7% or do we want to do 3%? Better judge. I don't know, because they sell covered calls out of the money at different percentages based on the IV too. So you have to consider that. So it's tough to grade them all in the same fashion, but you got to do what you got to do. Next is AMDY. Again, very poor, but it's next to AMDY. They both have the same grade. So it's hard to hate on it. Look at it. Look at the prices. AMDY at 20, NVIDIA at 25. But look at the increases. Amazon's gone up 141%. NVIDIA's gone up 893%. So you have to keep that in mind. Now look at GDXY. Like, they only went up 23%, right, overall. And they still got a grade of 12%. So I don't know. Next is PP, GUI, Cony. Look at that. Cony grade 1%. Not good. That is why I can't really touch Cony. And then Squeed. I did not expect Squeed to do good anyway. OARC is in the negatives because their total beats percentage was higher than their IV. So who else is in the negative? We got OARC, we got AIYY, AMDY, Platy, Nefly. That's upsetting because I actually own Nefly. AMDY, and Phoebe is in last place. This really does make me want to sell Phoebe, to be honest. And they were on the chopping block for a while because they weren't doing well. But looking at this, 31% of the time, they have a fluctuation of 5%. And their IV is 26%. Is that really worth the risk for a single? I don't know, man. I need to think about that, actually. Nefly, same thing, man. Same thing. I mean, 25% of the time. I don't know, man. This is tough. This is, again, why am I doing this video? It's just to show you a different way to look at the fund, right? Some things we don't consider is just looking at the underlying alone. Because, guys, you're investing not only in the YieldMax fund, you're investing in these companies. Yes, the synthetic is essentially mimicking the movement of the underlying stock. So you are investing in the underlying. Not directly, of course, but you're following the movement. So you need to know what is going on with the underlying. So that's why I kind of did this. Again, it's from January 6, 23 till today. And I'll do this, again, going forward, if you want it once a month, once every 2 months, probably once every 2 or something like that. And then we can just kind of see like who's stepping up, who's doing good. The grades are probably going to be the same, not much fluctuation. Again, surprise to me, Nefly and Phoebe at the bottom. Not just because I invest in them. I would have thought the same way. AMDY, they could do better too. again, I'm not surprised. Like Plady, AMDY, AIYY at the bottom. OARC always sucks. Squeeze sucks. Cony, I'm kind of not surprised either because coin is nuts. However, they did jump 714% over that period. So what are you gonna do when it has a huge jump like that? You're gonna have plenty of weeks where it's obviously gonna go above 5%. So it's the ones that are flat. Like look at Squee, 8% change over that entire period, and 36% of the time that it went above, up or down 5%. That one is too wacko, right? So that's why I got a grade of 0. Okay. So anyway, let me know if you have any questions about this file. Let me know before you ask. No, I'm not sharing the file. Sorry, I'm not, because it's, I did all the work. It's all automated now. So I don't, there are some files I do share, like my options template. I share that, and there's a ton of different files, retire on files, this and that. But there's certain files like this one, which took me forever and a day. I'm just not going to share it. Sorry. In case you were wondering, but you don't need, just watch this and I'll basically talk you through it. It's a lot anyway. You don't want to bother with this crap. A lot of pivot tables going on and all that. But anyway, I hope you guys enjoyed this comparison. I hope it was helpful. If it was, please let me know. If it wasn't, let me know what else I can add that may be of help. But it's just a different way to look at things for YieldMax funds. And then go from there, right? You be the judge. Do what you want, though. All right. As always, none of this is financial advice. I am not a financial advisor. This video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, we will try again. I don't know. Whenever I do this video again. Also, you can let me know that too. Once a month. You want it once every 2 months. I don't know. Let me know in the comments down below. When am I going to launch this video? I haven't even thought about that. Probably not today. Maybe I'll do members only today, and then I'll launch this tomorrow afternoon. All right. I think that'll work. All right, guys, I am out of here. I hope you guys enjoy the rest of your day, and I will talk to you soon. Later.